new taxes, and cuts. Your 2025 financial forecast. Welcome to a special report on the significant financial shifts impacting Americans in 2025. While headlines might suggest new taxes from Trump, the reality is more nuanced. President Donald Trump's administration has primarily focused on federal spending cuts, while a wave of state-level tax adjustments is set to affect your wallet. Let's break down the most crucial changes. First, to the federal level. President Trump has achieved a notable legislative victory with a $9 billion package of public spending cuts. These are independent state decisions, not directly tied to federal legislation, but they will impact individuals and businesses across the nation. Many of these changes became effective on July 1st, 2025. California is seeing a jump in cannabis and tobacco taxes. Arkansas and Kansas are expanding sales tax exemptions for data centers. Alabama is reimposing income tax on overtime pay. Several states, including Georgia and Idaho, retroactively reduced their individual and corporate income tax rates as of January 1st. Washington is making its estate tax more progressive, with a top rate of 35% for estates exceeding $9 million, making it the highest in the nation by a significant margin. Maryland has established a new extended producer responsibility program for packaging. Staying informed about the specific legislations applicable to you is crucial in the coming months. Missouri legalized sports betting with a 10% wagering tax, and in a particularly impactful move, Washington will begin applying its sales tax to certain services, including digital advertising and IT services, from October 1st, 2025. A move described as a hefty tax that could encourage businesses to relocate. Maryland added new individual income tax brackets and a capital gains surcharge for high earners. However, Maryland is newly applying a 3% sales tax to various business-to-business services, including data and IT services. Conversely, Minnesota is repealing its sales tax exemption for data centers. Mississippi is offering some relief by reducing the state sales tax rate on groceries from 7% to 5%. Hawaii is implementing a new road usage charge for EVs. Illinois is increasing taxes on sports wagering, e-cigarettes, and moist snuff, and expanding the definition of taxable tobacco products. Indiana is drastically tripling its cigarette tax and doubling vapor product taxes. Maryland is raising vehicle excise tax, cannabis tax, and sports betting tax, plus adding a new rental vehicle tax and tire fee. New Jersey is eliminating the sales tax exemption for zero-emission vehicles, making them fully taxable. Washington is significantly increasing its gas tax. This marks the first time in over 3 decades a president has successfully rescinded already approved appropriations, aiming for government efficiency. Many states are increasing gasoline and diesel taxes, introducing or raising fees on electric vehicles, and hiking taxes on tobacco, vapor products, and cannabis. Sports gaming taxes are also on the rise. These cuts, approved by Congress, target 2 main areas with significant impact. The first is the total elimination of funds for public broadcasting, a staggering $1.1 billion allocated for the Corporation for Public Broadcasting, which finances NPR. This includes $800 million for emergency shelters and refugee aid, $496 million for humanitarian assistance, and $4.15 billion for programs promoting economies and democratic institutions in developing nations. Opponents fear these cuts could weaken the U.S. position globally and create a vacuum that other powers like China could fill. While a $400 million cut to PEPFAR, a program combating HIV/AIDS, was removed. The overall reduction is significant, and PBS has been canceled for fiscal years 2026 and 2027. Republicans justify these cuts by citing liberal bias and woke ideology. However, NPR and PBS leaders warn of an unwarranted dismantling of beloved local civic institutions, projecting severe consequences, especially for smaller rural stations. Essential services like local news, educational programming, and emergency alerts could be jeopardized, with some rural stations facing total closure. This package, the White House indicates, is just the beginning of further rescission efforts. Next, substantial cuts are coming to foreign aid programs, totaling approximately $7.9 billion. Now, let's pivot to the significant state-level tax changes taking effect this year. Expect widespread excise tax changes. Some specific examples: Alabama and Mississippi are increasing gasoline and diesel taxes. Moving to sales and use tax changes, some states are expanding exemptions, particularly for data centers. On the income tax front, South Carolina is temporarily reducing its top marginal individual income tax rate. Finally, property tax changes are also on the horizon. Kansas is discontinuing certain state property tax levies. Other notable changes include Alabama providing income tax relief for non-resident workers and reducing the preferential sales tax rate on food. These federal spending cuts and diverse state-level tax modifications represent significant shifts that will undoubtedly impact the economy and the financial situation of taxpayers and businesses. Throughout 2025, money